Welcome back to a new video from Supertrend. We really appreciate you guys watching the videos en masse and leaving nice comments under the videos. From now on you can follow us on Instagram. Via our Instagram channel we occasionally share free buy and sell positions that we also share in the premium subscription. This way you can get an inside look at what to expect. In today's video we show a complete Heikin Ashi trading strategy combined with the Supertrend indicator. We first covered the basic information about the Heikin Ashi candles and the Supertrend indicator where, after we continue with advanced trading strategies that are explained step by step. Before we start I want to inform you that our premium subscription is now fully launched. With our premium subscription you can make exactly the same trades we do. Every time we open a position on the crypto or forex market we immediately share it with all our members. We are the only trading group in the world that works with a no profit is money back guarantee. This means that when our trades are not good you get all your money back. Having said that we will now quickly start the video. But this strategy we use the well-known Heikin Ashi candles. These are candles which you can use on the analysis platform TradingView. Heikin Ashi candles look a bit different from traditional price candles. Here on the screen we see on both sides the same rise. However, at the left side of the Heikin Ashi candles you'll see that the candles remain green and red for a longer time. This ensures that the trend becomes clear. The most important advantage of these candle patterns is the insight you get on the market. Heikin Ashi filters out market noise, which makes it easier to see the direction of a trend. With regular candlesticks the candles often change from green to red and vice versa which makes them difficult to read. Heikin Ashi on the contrary usually has several candles of the same color in a row, as a result of which price movements and trends are easier to see. However, there is a disadvantage to the Heikin Ashi candlestick. It so happens that these candles do not show the exact open and close price of a certain period. However, this is only to the disadvantage of traders trading on the longer term. If you're executing a day trading strategy like this one, you shouldn't be bothered by this. Other than the Heikin Ashi candlestick we use one indicator. This is the Supertrend indicator. The Supertrend indicator actually looks a bit like the Heikin Ashi candlestick but then in the form of an indicator. We can easily see by means of a green area that the price is in an upward trend. Apart from that we can also easily see by means of a red area that the price is moving in a falling market. If we take a look at the price, we can actually already see that this indicator in itself already shows very good buy and sell entry positions. But we're not just going to get in when we see a green or red area. We are going to combine the green and red areas with the Heikin Ashi. For example, if we look at this green area from the Supertrend indicator we know that price is moving in an upward direction. So the price is going up. But as you probably already know, the price never moves up in a straight line. The price always moves in waves. We can see this by the red Heikin Ashi candles. As soon as the red candles appear the price will make a small drop. Such a drop subsequently gives us the opportunity to buy the price cheaper in order to subsequently make a profit when it rises again. As you can see, in most cases the price is rising again as soon as the red candles turn green again. As it happens this gives a strong signal. It so happens that the Heikin Ashi candle turns green while the Supertrend indicator is also still green. However, there are a number of rules related to this strategy. We don't open a buy position just like that as soon as the red candle turns green again. Now I'll explain these rules to you step by step. Subsequently I'll also open a live trade so that you'll be able to see exactly how I personally implement this strategy. Rule 1. On the left side of the screen we can see several small red candles, after which the candles are going to turn green again and the price is immediately going to rise again. However, all these red candles are not falling very much. There is no real question of a drop. That's why we're always waiting for at least 4 red Heikin Ashi candles. This is what we see here for example. Here we see at least 4 red Heikin Ashi candles which also clearly form a drop together. Then these red Heikin Ashi candles are again turning green, after which the price is rising after a drop. This is a very good example. We see that this drop is much more clear than the small drops before. So rule number 1 is to wait for at least 4 red Heikin Ashi candles. The second rule is actually quite simple. As soon as the red candles have turned green again, the first green candle should be a clear green candle. Here you can see examples of a clear green candle. In this example you see a less clear green candle. Most of the time the first green candle will be clear after having displayed at least 4 red candles. Sometimes this isn't the case. Then you'll be able to see a candle like this one. In this example you can also see that there were not at least 4 red candles. So after that the price went further down again. But this strategy we can trade every day as it is a scalping strategy. As a matter of fact, besides the buy positions we can also open sell positions. These are positions which allow you to make profits when the market is falling. So there are opportunities every day even when the market is falling. We simply look at the color of the Supertrend indicator and decide whether to open buy or sell positions. As here we see a red Supertrend indicator. So we are going to look for sell positions in this area. Sell positions actually work the same way, only the other way around. In the red area we now first wait for at least 4 green candles. As soon as 4 green candles appear on the price, we wait in this case for a clear red candle. After that we can open a sell position. If we look at the first example on the left side of the screen, we can apply the second rule very well. Here there are at least 4 green candles, but the first red candle which appears after that is not clear enough. So we're not opening a sell position here. As you can see the price also continued to rise after this. A bit further on there were again at least 4 green candles, after which a clearly visible red candle did appear. You can see that this candle is much clearer than the other candle. So at this point we open a sell position, after which you'll see that the market is going down considerably. So it's a very profitable position. If at this very moment you're still watching the video, I'd like to advise you to finish this video as well, because from now on it's only going to get serious. After this video you'll be able to trade profitable and earn at least $5,000 per month. Later on I'm going to show you how to open a position live, but first it's important that you learn something about risk management. Risk management is one of the most important things in day trading. Many people forget this, and that's the reason why they will never trade profitably. For the serious traders among us, I want to answer the question that is often asked under the videos. That is the question on which platform it is best to trade crypto. I myself always trade on the exchange Bybit. I do this because it is a clear and professional crypto platform on which you can easily place buy and sell positions. In addition, I always use levers to make profits faster. With levers, you can increase your positions up to 100 times faster. However, you can also lose 100 times as fast. So use this feature only if you are executing a good strategy. I also use this 4-price layout to easily keep an eye on multiple quotes. Hugely useful if you are a day trader. In short, Bybit is a good and reliable crypto exchange to trade on. Do you also want to trade on this exchange? Then you are currently in luck because Bybit is giving away one-time deposit bonus up to $3,000. You can visit Bybit via the link in the description. Let's quickly return to the strategy. Let's talk about risk management. Risk management in fact means that you limit your risk. You now know exactly how the strategy works, but you don't yet know where to place your stop loss and take profit target. That's what I'm going to explain to you in this section. First I'll go through one more position with you from the start. We see here a green Supertrend indicator. So we're going to look for buy positions as soon as there are at least 4 red candles on the price. On the left side of the screen we see 4 red Heikin Ashi candles in a row. After that we see a green candle appearing. However, as we know from line 2, this is not a clear green candle. So we don't open a position here. Then we see 3 red Heikin Ashi candles, followed by a green candle. Here also we don't open a position. You learned this in rule 1 because there has to be at least 4 red Heikin Ashi candles if you want to open a buy position. Then we see here at least 4 red Heikin Ashi candles followed by a clear green Heikin Ashi candle. So we can open a buy position here. Exactly at the right place, because after that the price goes up. I am opening a buy position at this moment. Note that this is not yet the live position. Later in the video I'll do a full live position. This example is just to explain how it works. The stop loss of this buy position I place below the red Heikin Ashi candles. The take profit target I then place twice as high. You can see in this tool that I get a risk reward ratio of 2. This means that my take profit target is twice as high as my stop loss. We always want to earn more than we want to lose. It sounds very simple, but 90% of the traders do not do this. This is also the reason why they trade at a loss and never become successful. So a risk-reward ratio of 2 means that you earn twice as much on a take-profit target than you can lose on the stop loss. Suppose you want to lose $100 per position, you will win back $200. This ensures that you can lose a free position the next time should that be the case. Now if you lose the next position you still have $100 profit. I'll now show you a trading session of a falling market. On the left side of the screen we see our first entry point. We see at least 4 green candles followed by a clear red candle. So exactly at this point we open our first sell position. We put the stop loss above the green Heikin Ashi candles and we raise the take profit target twice as high. As you can see, a profitable position. Next we again see at least 4 green candles. However, the first red Heikin Ashi candle is not very clear to me. So I don't open a sell position here. It would have been a profitable position, but you never know in advance. You always have to stick to the rules since it happens more often than not that the market doesn't drop further after such a candle. Here again we see at least 4 green candles followed by a clear red candle. So we open a position and place the stop loss above the green candle and the take profit target twice as high. Here again we see a rise with at the end a clear red candle. So again we open a sell position. We put the stop loss above the green candles and we raise the take profit target twice as high. Here we see another entry moment. So we open a position. Then again a sell position that closes profitably. And to top it off, another profitable position that follows. Then we see 2 rises, after which, unfortunately, the red candle was not clear enough to open a sell position. But a little later we see one more entry moment. Here we open a position, but it closes with a loss as the trend changes to an upward trend. As soon as the Supertrend indicator shows a green area again, we start opening buy positions again. The first one takes place here and immediately closes with a profit. You can see that this strategy is extremely good. We opened 8 positions of which only 1 closed with a loss. On all profitable positions, of which there were 7, we applied a risk-reward ratio of 2. This means that we obtained 7 times 2. This is a total of 14. From this, 1 loss-making position is subtracted, leaving us with a risk-reward ratio of 13. As I just explained, with a risk-reward ratio of 13 this now means that you could lose 12 times in a row and still be profitable. Suppose you want to lose $100 per position on the stop loss, then with a risk-reward ratio of 13 you would have earned 13 times $100. That is $1,300. Now let's continue with a live trading position. In the example I'm going to show you, I want to prove that trading crypto is already possible from a low starting amount. I have deposited on a new Bybit account $400 with which I am going to open a position based on the strategy I have explained in this video. I just analyzed on TradingView a position on the cryptocurrency Gala. We see a red Supertrend indicator, so we can only open sell positions. Then we see 4 green Heikin Ashi candles, after which a clear red candle has appeared. So now we can open a sell position. For the sake of clarity I'm using the tool on TradingView. The stop loss goes above the green candles and I place my take profit target twice as high. On the right hand side of TradingView I see the exact prices of the stop loss and the take profit target. In a moment I'm going to fill these in on Bybit. The stop loss is at $0.20090 and the take profit price is at $0.19727. Now I'm going to go to Bybit on my other screen. You may initially be wondering why I'm not analyzing this strategy on Bybit itself. This is because the Heikin Ashi candle is only available on TradingView. Unfortunately you can't use this candle on an exchange. However, I do open my positions on Bybit. If you also want to trade on Bybit then you can create an account via the link in the description. At the bottom you can see that I have $399 on my account. With this I'm going to open a sell position. On the left side of the screen you can see that I am on the trading page of Gala. On the right side of the screen, I now press market. This means that you can immediately open a position at the market price. Below that I fill in how much percent of my $399 I want to invest. I have it set to 100% now. I want to invest everything. Below that I indicate that I want to open a sell position and immediately fill in the stop loss and take profit price. Here I now fill in the stop loss and take profit price that we just saw on TradingView. You can immediately see the possible losses and profits underneath. If I zoom in, you can see that I can only lose $17.82 of the $399 I invested and win as much as $54. Always go through this process as quickly as possible so the prices don't change. I then press the big red sell button and this is how I open my sell position. Bybit first asks if I am sure and then I press confirm. You can see that my position is now open. I can always monitor my position live at the bottom of the trading page. You can see that I'm already making $10 in profit because the market immediately dropped a bit. If you keep watching you will see that the profits and losses change every time the market drops or falls. So if the position closes with a profit I win $54. That is as much as a 13% return on total assets of only $399 that can be achieved in a few minutes. I am now letting the position run and it will automatically close with a profit or a loss. You don't have to look at TradingView anymore because the position is already placed on Bybit. Of course you can already start looking for a new position. As you can see it's quite easy nowadays to be able to trade profitably with a small capital. It is not a secret. This is because of the levers we use on Bybit. However, this is a feature that you should only use if you are executing a profitable strategy like this. So if you don't want to start with equity right away then you can use the $3,000 deposit bonus that Bybit gives once to every new user. You can make use of this bonus via the link in the description. If you don't feel like analyzing the quotes yourself you can also use our premium subscription. With our premium subscription we will analyze the quotes for you so you don't have to. I want to thank you for watching this video and I look forward to seeing you next week.